Welcome back. Look, do remember that we will be keeping tabs, of course, on the job summit. And as soon as President Cyril Ramaphosa does head to the podium, we will give you that footage as well. But for now, let's head on over to the Asian market, which suffered further losses this morning, hit by mounting fears about the path of the United States interest rate hikes and the increasingly fraught relations between China and the United States. Tech firms were among the worst hit following news, of course, and a report that said that Beijing had used microchips as part of a drive to steal technology secrets. Markets were dragged down by a negative lead from New York and caution ahead of the key U.S. data, jobs data that comes along today, and a long weekend in Japan. Asian stocks dipping with Tokyo's Nikkei down 0.8%, 23,783. The Hang Seng dipping 0.2% to 26,572. Shanghai still closed for that public holiday, comes back on board on Monday. Let's head on over now to the United States, where stocks ended sharply lower last night as Treasury yields continued their ascent to multi-year highs on the latest round of strong economic data, building concerns for an acceleration of inflation. The Dow Jones suffered its first decline in 6 sessions, while both the S&P and Nasdaq had their worst day since June 25. The industrial falling 0.75% to 26,627. The S&P 500 losing 0.8% to 2,901. The Nasdaq Composite dropping 1.81% to 7,879 points. Not much impetus coming through from global markets, and of course with the volumes muted considering how Shanghai is still closed for that long holiday across the week, of course, national holiday there. We will unpack just how the markets are faring, a weakness in the South African currency, and of course some strength, if you want to call it that as well, in the oil price firmly around $85 a barrel. For now, let's unpack the European and local markets. Well, we do continue with our market wrap now, and Warwick Lucas from Galileo Capital joining me as we unpack this as usual on a Friday. Warwick, thank you so much for your time. Still a sense of negativity across this market. Where do we find any sense of positivity?
Yeah, look, I mean, it does seem rough at first glance. I think the oil price, well, that's a bit of an interesting mixed bag there, because on the one hand, none of us likes to pay more for our oil, but on the other hand, a firming oil price suggests some confidence coming back in the global economy in terms of future growth there. So it's a double-edged sword, that one.
Yeah, quite an interesting market overall though as well. If you take a look at, the stocks have not really done anything enterprising. We wait for next week as well to see if there's any impetus there, but a loss of around 1% nearly today. Now we're headed to 54,000 points for the JSE All Share, way below that all-time high of around 61,000. Do you think we find any more sort of momentum as we get towards the end of the year? Do you think this is it? We're literally in the doldrums until the end of the year.
Okay, so generally October and November are the most volatile 2 months of the year on any stock markets, and that can be both a good thing and a bad thing, and I guess we still got to see.
Why is that?
I think it's a seasonal factor, particularly the Northern Hemisphere really getting back into the swing after summer holidays and a process of digestion, and then really getting back to business. So I guess that's the traditional underpinning there. And then, of course, financial year ends coming through in December and so on. So, yeah, I mean, in the meantime, I guess the market's going to be watching what happens with those US-China trade talks. I mean, we can see the heat getting up there with the discussion around whether or not there's spy chips getting planted. I mean, that's potentially messy. Of course, Apple and Amazon both coming out quite strongly against those comments, and I guess other parties would say, but yes, they would, wouldn't they? But I think in looking past all of this noise, one would look at something like NAFTA, for example, the North American trade deal. And that got quite neatly resolved to the benefit of pretty much all parties.
Yeah.
And I think
just renamed essentially, right?
yeah, with the key friction points dealt with and moved along. And I think we need to see the same outcome coming through between the US and China. I mean, that's an absolutely key negotiation there, and particularly in the arena of intellectual property. I mean, that is the be-all and end-all about that fight.
Yeah. Do you think relations can be repaired there, though? It seems like it's been such a tit-for-tat that at this point, it seems like even if something was to be agreed upon, it would be literally just to the benefit of one and not the other. And, you know, there'd still be a sense of resentment from the two nations.
I think it's important for the participants to remember what Winston Churchill said about countries, and that is that nation states do not have friends, they have interests. And they need to focus on what are their individual interests and then the interests of the world as a whole.
Yeah, very, very interesting sentiment there. We're closing out the Job Summit. 275,000 jobs a year is the pact that was signed yesterday to create those jobs every year. Realistic?
Well, not necessarily. I think I remain concerned that our environment in terms of employment, hiring, conduct of business continues to be basically an adversarial employment model. And that to me is a great concern, that you actually, to really unjam the South African job building process, we need to, I think, have a greater level of empathy between business and labour. Otherwise, it's just not going to work.
Yeah, but a lot of talking keeps getting done. It's time now to get the implementation, right?
Very much so. And yeah, I mean, obviously skills development, I think we need the unions to come on board there and actually help with facilitating development and change their approach to education.
Do you think this is the hard grafting that President Cyril Ramaphosa has spoken about, to continue to work hard, to work in collaboration with labour, with unions, with the private sector as well, to perhaps help South Africa now come up with one mission statement, so to call it, in order to, of course, help the situation? Unemployment still well above that 25% mark. It's more than necessary now, more than ever, to get this right.
I think the hardest work that anyone will ever do is to take the issue, put it in a bag and toss it in the dustbin. And that's really the adjustment that's needed here.
Yeah. Very finally, let's talk about just the jobs numbers out of the United States. A little bit of excitement perhaps when it comes to that. Not necessarily for us, because I think the Rand will blow out again continuously. That sits the Rand, if you take a look at it, around 14.75 now. A lot of weakness there, and a better than expected jobs number certainly not going to help us either.
Yeah, I think, look, those non-farm payrolls, it's always a bit of a messy data. It's not the most reliable data set. So it does make markets a bit more nervy. I mean, they often get resolved and they're not well accounted for. I mean, typically your unemployment numbers are better indicators. But all indications are that employment in the US remains robust.
Yeah. That is a true story. We'll continue to unpack those and see how it fares. It comes out later today as well. So we'll check in on those unemployment numbers out of the United States. That is a look at your markets. The CIO of Galileo Capital there, Warwick Lucas, joining us in studio. That's where the buck stops when it comes to your business news, but more comes up right after this. Do stay tuned.